What's up, guys? Welcome to the Mississippi Real Estate Podcast, hosted by Ryan Watson.
And I'm Trip Sproul, where it's all about real life, real talk, and real estate.
Join us as we dive into the stories, trends, and insider tips shaping the world of Mississippi real estate.
Whether you're buying, selling, investing, or you're just curious about the market, we've got all the insights you need to navigate with confidence. So if y'all are ready, let's get real.
All right, guys, welcome back to another episode. We have a very special guest today, and she is amazing. And she has been in the business for 18 years. This month, she is one of the a partner and one of the owners of Maselle and Associates.
That's right.
And she usually sells about anywhere from
75 to 100 units?
75 to
year.
100 units a year, and which is 16 or 17 million in sales. Yeah. That's incredible.
I mean, probably just a small part of the market share.
Yes. Without further ado, we have Monique Maselle Kelly with us, and we're so happy that you're here with us today.
Thanks for joining us.
Yeah.
Look, so we're getting into a topic that I'm really excited about.
Yeah.
Single family residential rentals.
Okay.
And I know that we have rentals, and he's aspiring to get into it, and a lot of people aspire to get into it. Before we get into the topic, though, why don't you tell us who Monique is in a roundabout way?
Well, I grew up in the business, or around the business. My dad, my grandmother, and my aunt were all owners of, it was Maselle Realty back in the early 80s, and then it became Century 21, and now it's Maselle and Associates. So I grew up around it, always said I will never sell real estate. And then here I am.
Yeah,
so,
look at you now.
so, I feel like it was just kind of inevitable that I would end up in the family business. So that's kind of how I got into it. And, it's I started in 08. I mean, 07. I started in 07, so I cut my teeth on
the downturn.
Yeah, on the downturn.
Yeah.
So
That's a terrible time to be in.
Yeah, I learned a lot. at that time.
Well, could be a terrible time, but then a good time, because when it didn't last as long as everybody thought. But a lot of stuff happened where there was a lot of appreciation that was lost,
Right.
and so there was a dip, no doubt. I mean, or a bust or whatever.
Mm-hmm.
But then you were able to learn from that and then ride it back up.
Yeah,
which was fantastic for your career.
I mean, I would say it's been a lot easier since then. Everything's a little easier. And I actually had an opportunity in 2019 to work with a company called Roofstock, which is kind of how I got into working with investors. And so I would basically underwrite properties for their website, upload them. And so I just made a lot of connections that way, met a lot of property managers that way, and just people kind of in that business. And so kind of once you're in that business, it just kind of grows from there. You make new, more connections. But crazy thing is that Tripp and his wife were actually my first investor clients.
What? Were we your first?
You were my first.
You never told me that.
So I got to learn how to do it with y'all.
Oh, that's fantastic.
That's cool.
And that was back in, I don't know, when did we start?
Well, funny thing is, somebody asked me not too long ago, like, hey, how long have you been in real estate? And when people ask me that, I always say, well, I started investing about 7 or 8 years ago, and then sales, I'm going into my 4th year of actual sales, as a realtor. And then I got to doing our quarterly numbers with our rentals and looking at all the stuff, to stay on top of your business. Mm-hmm. And I look back at when we bought 202, and I was like, that was actually 10 years ago, not 8. Wow. We've had that property for 10 years.
Well, I got to learn with y'all.
Yeah.
So then when I had the opportunity with Roofstock, I was like, yes, I have experience because y'all gave me that experience.
Well, now I feel, okay, so a little fun fact. Too. Like Monique and I went to high school. She's Northwest Rankin Cougar, too. He graduated from Northwest as well.
Okay, I'm cool.
So we had classes together. We were friends in high school. And then, when we grew up and got out of college or whatnot, Tracy and I got married, and she was our realtor.
Yeah.
And so she helped us buy our primary residence and 5 rental properties. Yeah. Well, no, 4 rental properties. So she's helped us buy 5 of our properties.
Wow.
Yeah.
And then I called her one day and I was like, hey, I'm thinking about getting my license. And she's like, I'm so excited for you. So, I mean, I hate to lose y'all's clients. So I was like, I know, I hate to even break this news. But anyway, she was very supportive of me getting into the business after.
For sure.
That's cool. So that kind of jumped you into the investment side.
Right.
Yeah. Before we get into that, though, explain to folks, and we'll reconnect these dots, what is Roofstock?
So it's changed a lot. I don't really work with them anymore, but and it sort of changed over the years. I worked with them probably 3 or 4 years, before things kind of changed with the market, and then they lost a lot of people and kind of transitioned. But basically, it was a platform for investors to look at different markets. And so I even had a client from New Zealand that bought a property here.
Wow, that's crazy.
So originally they would put in properties. You would just get an offer right away. If a client was interested in it, they would put in an offer through the website. I would get the offer. I would communicate with them. But then it transitioned, and I actually was the one finding the properties. So I would search every day for new properties, and then I had access to their website. I would upload the properties. I'd put in the taxes, the rent, estimate on the rent, that sort of thing. And then they would come up with all the numbers, and then they would put it out on their website for investors to look at. And so that really jump-started that little niche for me. And I got a lot of experience there, and then a lot of repeat clients, and then they would refer other investors to me. So I would say because of all of that, 80 to 90% of my business is with out-of-state investors.
Yeah. Which is fantastic because you found a niche, like you said, niche or whatever people say.
I think either way, I don't know. I say it. Yeah.
So I will say this too, and when we did our first deal, me and Tracy with her, it was a what was that thing? It was a bank owned, or it was on auction.
It was like a foreclosure.
Yeah, it was on something.
I feel like it was a HUD property, because we had to figure out how to do all the paperwork with HUD. And,
but my point is that I never knew at that time. I never knew until now. She told us that we were her first investor.
And I was around it. My parents have always owned rental properties. My aunt, they've owned lots. So I've seen, I had enough understanding and what to look for. But definitely they were my first investors. So.
Well, I feel like blessed for that, because you did such a good job, and we still own the property. It rents really, really well. It was a disaster when we bought it, and we saw through that, and she helped us see through that. But you did so good, we never knew. But the funny thing is, you were learning and we were learning. We didn't have a clue what we were doing, and we were so nervous when we bought that thing. But we can get into that too a little bit later, because there's a lot of things we want to get into with this episode. But anyway, so Roofstock. Because you were killing it as an agent anyway, in just the regular retail market, And
that opportunity, it was they approached my dad about it, and he didn't know anything about them, and he just kind of came to me, and he was like, if you want to look into this, I don't know that this will ever turn into anything. I don't really know what it is, but you're welcome to. And so I did. And I mean, it turned out to be a really great thing, but you had to really work it. It could have been something that didn't turn into something, but it was definitely worth it. You kind of start learning all the lingo, learning everything. And, and then I could just go check out the hot sheets in MLS and be like, okay, that property looks like it would work. Let me underwrite it and put it on the website. So it was a really cool thing.
Real estate has its own language anyway, but man, you get in the investing world, there's a whole other real estate language that goes on with that. All right. Well, so let's get into it then. So layman's term, simple definition. What is single family rentals?
Well, they're just, it's not multi-units. It's one unit, basically. And, you turn it into a rental. So, I actually this past year, bought 6 properties. Although one does have 2 units. It's a townhouse with 2 units. But
that still
all the rest are single family.
Right. So this what separates the multifamily as far as unit size?
I think it's 4 or more.
Once you get over 4, then you consider
which a lot of investors, they want to start off with single family. They're just easier to manage, and then a lot of them want to get into multifamily eventually. That's kind of their next goal. But single family is great because it's something that everybody can get into and can afford. You get into multifamily, it gets more expensive. You're going to have more cash up front. The financing is more limited. So single family it's just a lot more options, and it's more accessible, especially for first-time investors.
That's where you get your foot in the door.
Yes.
In investing would be in single family.
Right. That's right.
Yeah, I would say in my experience, a small majority, or not even majority, a small minority, would just jump right into like the multifamilies. I mean, you got to think maybe if you were like capital cash flush, and you had somebody that was already in that game, and they were telling you just get into it and you can, and you really trust that person. But it seems like single family is the first step.
Yeah, I agree.
And in your experience, because you're in the game every day, like, what do you think people's interest level are versus the people who actually like dip? How many times do you have conversations about like, oh, I'd love to do that, and
because I get a lot of calls from people that are out of state. They're pretty serious. So most of them they do follow through.
Yeah.
Some of them have unrealistic expectations. And so, like if you pull up Mississippi and you start looking in Jackson, they can see properties for like $30,000 or $50,000. And so I do have some that call me about those type of properties. And those hardly ever work out once they get the inspection done. So, but I have had some that wanted lower price stuff, and I just sold one that I've been working with the guy kind of off and on for over a year, and he wanted something close to $100,000 in a good part of Jackson, and we found him one that he could do like an interest-only in-house loan on and do some rehab work to it, and then he's going to turn around and refinance it. So he was able to get something at a lower price, but it just takes a lot of time to find those properties. And I had to get, estimates for him up front just so he could look at all of the numbers in the very beginning to even decide if it was something that he wanted to do.
So, speaking of one of those terms, if I'm hearing that transaction right, that's what they call in the industry the BRRRR method, right? So he bought one, he rehabbed it, then he's looking to refinance it, and then he's going to repeat it.
Right.
So or if you watch Bigger Pockets, they talk about the BRRRR method all the time. I think it's become a popular acronym.
It is, I think so
but
too.
You said something that is, and we're going to get into some financing options for these things later.
Yeah.
That method works if you know your numbers.
Right.
Because Monique can attest to this for me. Well, Tracy and I were getting in, like, it's like that. I would listen to all these podcasts, and we were doing all these, like, all this studying for investing. I was like, I want to do this BRRRR method. Like, and then I would do my numbers. It was like, it doesn't work for me. Like, and I was banging my head, and Monique and I finally were like, hey, you can't, like, do a conventional mortgage and do a BRRRR method.
Right.
And you can get in trouble if you try to do that, because then the numbers don't work and you can't refinance it.
Right.
And now you're just like, uh-oh. Yeah. So anyway, I guess the point of that is a lower value home that you can try to force appreciate some, and you come into cash, that's when that works better.
Right.
Then,
and if you know what it's going to appreciate in the end, too.
Yeah.
Because that's important for the refinance. I've done two like that.
Yeah.
One of them, I ended up not having to put anything down throughout the whole process because the bank provided everything up front for the in-house loan. It was, I paid the interest because you have to pay the interest each month. And I did that for 6 months, and then I refinanced it. And because the value was so high from the appraisal, I didn't have to put anything down. So it was a great investment because I had hardly any cash out of pocket, and the rent is great compared to what I actually financed it for. So that one's been really successful.
Yeah.
I did another one, and I'm in the middle of refinancing it right now. Unfortunately, it didn't appraise quite what I wanted it to appraise for, but pretty close. So now the only thing I'm going to have to put down is like $10,000. But still, when you're comparing that to $50,000, it's still a great savings, So
and so So this is one of the benefits, I think, what Monique's saying right here is you just heard no money down loans. You hear that in the business of investing, or being able to cash out, refinance to go find your other one.
Right.
But what's really important here is to do these type of financing tricks, because it's not what typical retail, if you're buying and selling a home as a first-time home buyer, this is different.
Yeah.
And so if you're looking to get in the investment game, you really either need to talk to a professional about it or study what this stuff means and how it works.
Right.
Because she's doing these deals, but
it took me a while to do them.
It took you a while to do them, and it takes you a while to find them.
Right, it does. I work with some wholesalers that give me some good deals, help me find properties. And then, the others I've bought with conventional loans. So, you can do either, and I've gotten good deals on those as well. And a couple of them I bought when the interest rates were like 9%, and then I refinanced them a year later, and it's at 7%. Yeah. And even though 7 is not great, I'm still cash flowing on them, so that it all works out. It's just
it helps
the numbers.
That bottom line for sure.
Yeah, it's just the numbers. But so you can do traditional, conventional. Investors pay a little bit higher interest rate than just your owner occupant would pay. It's usually about 1% higher, maybe.
Yep.
So you have to consider that. You can do bank loans, in-house loans, and then Tripp. I know he's done some hard money stuff. So
oh my gosh.
I haven't done those yet, but
Let's talk about those.
The hard money stuff. So I'll get to that in a second. I think what we're finding here, and this is what I say about real estate all the time. This is what I love about real estate. You can do this stuff to your risk tolerance and how you want to run it.
Right.
Monique and I probably have a few similar ways that we do it, but she also has done she's scaled her business in a way that I haven't yet, and it's because I'm not saying she's not conservative, but I
took some more risks.
Yeah,
so in the beginning, to get my first property, I didn't have, I had not done anything. I wasn't really aware of how to do the interest-only loans or things like that. So I had a property come up, and I didn't have all the money for a down payment. So I took a second. I took a second mortgage out on my house, and I was able to buy 2 properties with that. And so, that's how I jump started into it.
Yeah.
And that seems a little risky to some people.
Yeah.
I was okay with it, and I was able to scale quickly because of it.
And I get clammy when it, because I know it can be done. I just it's just something about pulling out the cash of my primary. But now my rentals have that, and I've been considering doing it with the rentals that I currently have, which is, so it's a way you can scale.
Right. And I'm still cash flowing, even paying that back.
Yeah.
So I haven't paid it all back yet, but it's all worked out because I was able to end up with 6 properties in 12 months. So it's kind of crazy,
in this market.
in this market with crazy interest rates.
Go back to
it can be done.
Go back to like you got in the business 2008. You were kind of learning on the recovery, and then you got into investing. Before COVID hit, investing looked totally different. That's why Roofstock was kind of people started noticing Mississippi was a good area. Versus, I think at that time too, like the places out on the East Coast and West Coast were still very heavily, like they were making good money and could buy properties decently for their capital. And then as we were approaching COVID, kind of like the Midwest and the Southeast kind of started getting, Roofstock came along.
Yeah.
Talk about the price points kind of from there versus when COVID shot everything up and where we're at now, if that makes sense.
I mean, historically, we don't have great, we have pretty leveled appreciation here. It's been marginal compared to the rest of the country. So we were really due some appreciation.
Yeah.
But the prices definitely shot up over COVID and, just like it did everywhere else, but still not to the degree that it did in other places. So most of my clients are from California. I've had some from New York and Virginia and some other places, but the majority are in California, and they just cannot purchase properties there. It's just too expensive. I've even had some clients that didn't even own their own personal home that bought investment properties here because they just couldn't afford it. So, we did get a lot of appreciation, but still not compared to the rest of the country. Plus, Mississippi historically has had high rent. I don't know why that is. It just has been that way. So the numbers here tend to be really good. They are also a little bit like that in Birmingham. I think they've had a little bit more appreciation than us, so that may have changed a little bit. But we just typically have a lot of renters here, and the rent is higher. So,
which is, I mean, I would assume is good for investing in a property because you're going to get a lot of cash flow back, and there's a lot of room.
Well, specifically her clients, because a lot of them were working with all cash, aren't they?
Yeah, a lot of them did.
Yeah.
Especially
and a
where
lot
the cost of living is really high in California.
Right.
The cost of living, and then being able to buy here, I'm sure.
Well, they'll look at a house here and be like, God, that house here would be $1 million, and it's like 350 or whatever. They're just amazed.
I'll buy 8 of those.
Yeah.
I'll buy 8 of those right now.
We'll sell them to you.
Oh yeah.
And she
We'll
does.
help you buy them. Yeah.
I've even had a client. He moved here from like San Francisco. He retired. He sold a townhouse that I think it was his father or grandfather had owned, and he made a lot of money off of it. He moved here. He's building his own personal home, and then bought 3 rental properties with me.
Wow.
Yeah.
So, and they were good quality properties.
Yeah.
So,
The price, so single families we believe are popular because it's the first step, and they're kind of easy entry, to get in the game. And I would say before things got really crazy, like when Tracy and I first started investing, you could find really good houses with good bones.
Like a new construction starter home was like $150,000.
Yes.
And now it's like
425.
Yeah.
210 a square foot.
220, 210, 220.
I wish I'd bought back then.
Well, that was my point. Like when talking about the different ways of financing, and I'm probably going to get a little long-winded here, but I'm trying to connect 2 dots. What I said earlier is what I like real estate investing about, or even real estate, is that you can run your business differently on numbers that work for you.
Right.
You can if you're cash heavy, you can do it. If you don't have the cash, you can find
creative ways.
You can still do it conventional lending.
Right.
Because that's what I get asked a lot. Like, how did you get in the game? I was like, we just saved 20%. We went and bought a house.
Yeah.
That was it.
Yeah.
The end. It took. I think Trace and I studied it for 2 years before we ever pulled the trigger. And at one point, we're like, hey, are we ever going to do this, or are we just going to keep reading about it and watching other people sort of do it around
I feel like we're there right now.
Yeah.
Me and Sarah.
Let me tell you something.
When you're sitting and learning all these things.
Yeah, well, when you're sitting at the closing table and you're signing all these papers on a house you're not going to live in, it's weird for your first one. And it's kind of intimidating.
I got to tell you, my husband, Michael, has never even seen one of the houses that we've bought. He's never even been in them.
That's funny.
He's like, that's your deal. You do it.
Yeah.
But if you're in the business, you're in real estate, you're seeing stuff, you see opportunities all the time.
That's correct.
So it's a lot easier, especially if you're, a licensed agent or a lender or somebody that works in the business already, and you just have access to,
I see stuff now and I'm like, man, I wish I could do that right now. I could.
There's some right now that I'm like, ugh, I want to buy it. My husband's like, stop buying houses.
You're gonna thank me one day. Well, I get the phone call too.
We're building wealth.
Yeah.
Slowly.
Like, this is our future.
Well, we got. This is why I love this topic, because I'm just all off of us kind of playing around. There's 3 or 4 rabbit holes I can go down, but
for sure.
But seriously though, I mean, the barriers to entry are easier on single family, even in today's market.
Right.
What I tell people is that also depends on your risk tolerance. If you want to go learn about 0% down money or utilizing your home equity line of credit, then do that if you're comfortable with that. As long as you understand the risk and you understand how all the money flows and works, whatever, then fine, do that. For me, I tell people, I feel like the less risky way is, and it takes a little bit more time and patience, is learn your market and build that capital. And go in with some money of your own money in, because if something were to happen, you had to exit it. At least you feel comfortable, like, I'm going to get that out.
Right.
You know what I mean?
Yeah.
And that's how Tracy and I approached it. Now, rewind to when Monique was helping us buy houses. And she got to a point to where she knew what we were looking for. And this is why she's been so successful. She would call me and say, hey, Trip, she's like, perfect 3-2 just hit the market. What do you think? I'm like, I don't have the money.
I know,
I could have gotten creative with it, but we were in that like, you
were
know,
hustling.
Yeah.
she was, but she knew what we liked, and they were
Right.
great homes. Now,
That's the key.
hindsight's 20/20. If I had a crystal ball, I would have felt comfortable with the previous houses we bought, doing the lines of credit and buying those. If I knew the market was going to explode, and now it takes even longer to build capital to get in if you do it that way, because the market prices are so higher, and it's harder to find.
Think about all that appreciation.
Oh my gosh! I know. Look, I kick myself all the time, but the good news is in this business, you have the ebbs and flows, and you can. There's
always opportunities.
100%, and look, we're in a. The Tri-County area is a great area because I think we have, like you said, stable appreciation.
Right.
So anyway, I say all that like...
And rent typically always goes up. So let's say you get a property and it's not the greatest cash flowing property. You've got that rent for a year, but it should go up a little bit the next year and the next year. So you got your rate staying the same, but your rent's going up. So eventually it will start to cash flow a lot better. So.
Yeah, so I just, I go back and say I should have been more aggressive. Now that I understand more, I know. And you'll have those moments, but that doesn't mean you still can't build. So that was my kind of regret before the prices shot up. And so now it's like...
Well, look, but it took me how many years to do it?
Well, I know. So
when I was ready, I was like, let's go.
Let's go. Let's do this.
Ryan, I would tell Monique, even after I became licensed and everything, because we always talk and we stay in touch. And I was like, hey, have you got any rentals yet? And she would tell me about Michael, like, he doesn't want to get in. I'm like, what? And I'm like, like, you're a rock star in this industry. Like, he should just... And she's like, I'm going to.
I just had to just go do it on my own and do it by myself.
Oh my goodness.
Yeah, and
but he's glad. He's glad.
Sure.
Sure.
And you did do that, and it's been working out great.
Yeah.
But I'm telling you, like, I know I kicked myself or whatever. Think about all the your past.
I know. I'm like all that
You
those
can have
houses. Because now it's to the point. I mean, I'm trying not to buy anymore right now. I'm going to wait a little bit. Yeah. But I see great deals, and I send them out to my clients, and I'm like,
yeah,
I can buy that one. Like, it's hard to pass them up now. It's almost like addicting to buy these properties.
It really is.
It's
I'm sure
fun.
it is.
It's actually really fun.
Yeah.
And you can see the potential in it. And
well, what are the benefits? We've been talking about this.
Yeah.
So I was connecting the dot. Like, you can make it work for however you want your numbers. We'll get into numbers later. And so that's a great benefit, is that it's doable.
We will need a calculator for the numbers.
Oh, yeah, we suck at quick math around here. But name some of the benefits. Okay, so one of the benefits is obviously it's an extra tool to build wealth.
right. Yeah. Owning the properties.
Yeah, what else do you get with that? Like, when people think about it, like, what do you tell people? Like, here are some of the benefits and incentives.
I think it's definitely wealth building. It's a future.
Yep.
It's something that it's a tax write-offs. I mean, you can get a lot of help with taxes with those. Yeah. I'll see from last year how much that helped my taxes. Hopefully a lot, but that's another way. It's just something you can. I feel like my daughter is a junior, and when she goes off to college, I really want to buy a property wherever she goes and let her be co-owner or something, and let her learn as well.
Give her some responsibility.
Right, give her responsibility. Yeah. But honestly, it's really for your future. I think it's a safe investment. Yeah. I mean, I think real estate is the safest investment you can make.
Yeah, I agree.
I know an investor who he had a son that got married, and he sold one of his rental houses to help his son out.
Yeah.
When they got married.
Yeah, and
that is so cool.
Yeah.
I would love to be able to do something like that one day. Yeah. And it looks different in different ways.
Right.
Whatever you do.
Yeah.
But it's really cool though to be able to have something like that to just say, look, I've worked hard all my life. I love you. You're doing great. Here you go.
Yeah.
Right.
A little blessings for them or something.
Yeah.
There's so many benefits. I tell people that they should. I believe that everybody should own at least two. Mm-hmm. And the reason I say they should own at least two is because it removes the risk if a door goes down. And I'm not saying go down like a fire starter or whatever. But if you have a vacancy,
right,
then you still have one rented. Typically, they don't vacate the same times, right? So you still have this one working while you're, freshening the other one up and then getting it re-rented. That's why I say at least two.
Yeah.
But the benefit, obviously you're building wealth through equity. And then you have the cash flow, which is another stream of income.
Right.
Yeah, I want to talk about that a little bit.
And then you, like you said, that's the tax. So I think that's the big three that most people see: building wealth, the cash flow, and then the tax. Right off the taxes or whatever.
Right.
So,
Right.
What are your thoughts about cash flow? Do you like to take your cash flow and put that back into the houses to pay them off? Do you use some of that, or
just live a
or do you-
luxury, lavish lifestyle and just?
I have not touched the bank accounts for those properties yet,
Fantastic.
unless
That's
it's
great.
like maintenance. I use them for the maintenance.
For sure.
Otherwise, I'm just letting them build up right now.
Yeah,
So,
that's
and
wise. I think that's very
eventually,
wise.
I'll probably take that money to purchase another one or have a down payment for another
Hope
one.
that's not getting too personal.
Oh, no.
I'm just curious.
No, yeah, so far. But I mean, I've only had them for a year, so but already the account is accumulating. So, and of course I'm paying them off, but I'm not trying to rapidly pay them off.
Right.
Yeah.
I'm going to try to use that money to buy more.
For sure.
Is my goal.
Yeah.
I want a
She's
lot.
trying to convince me to do the HELOC game to expand.
So
but I don't know.
I hear investors from time to time that I talk to that they say things like, "I'd like to purchase 2 more houses this year," or "I'd like
Right.
to purchase just 1 or 5." Do you have something like that you have in mind that you like to do? Or do you-
No, not personally.
just if you just see a good one.
But I
or
do have
something?
clients, they'll call me and they'll say, hey, this first quarter we want to purchase 4 houses. And then the last quarter we want to purchase 3 to 5 more houses,
Yeah.
And so they have goals like that. I'm just kind of like, just going,
Yeah.
just filling it out as I go,
Yeah.
personally, And if a good opportunity, like there was a wholesale property the other day, and I went and made an offer on it, and I did not have any intentions, but I could see the potential in the property.
Yeah.
It didn't work out, unfortunately, but so I'm just always kind of looking what opportunities are there.
Yeah.
And I would do another in-house like interest-only loan because those have worked out so great, and I don't have to have all of the out-of-pocket money for them. So,
Yeah.
I think I'd be more comfortable.
Use the bank's money.
right.
Hey, she mentioned hard money. I think I'd be more comfortable doing the interest only than doing the hard money stuff again. Boy, I was a nervous wreck
Yeah.
when I did
Yeah.
that. I mean,
I
we were
bet.
paying like 13% interest there.
Oh,
I mean, it
wow.
was,
Yeah.
man.
hey,
Well, I got a connection for you if you want to do
I
an in-house loan. trip.
yes, I appreciate that. I'll get into the hard money. The hard money, I'm trying to stay away from it a little bit because that was for a flip.
Right.
And I don't want to get too heavy and flipping on this on this episode.
We do
But
want
they
do
can
one on flip.
finance it once they complete the work.
Yeah,
or-
and that's the way we did our first 2 with you.
Yeah.
We found, and that's what I still like to try to find. I like to try to find a house that has good bones, but
Right.
just somebody like the love has been lost in that house,
Right.
and we can come in. And they talked about it with some properties, and I think people I think that's what they see in Jackson.
A little bit of elbow grease.
Yeah, well, it's forced appreciation. And that's another great thing about this business, about this investing strategy is you can take a house that's almost been forgotten and it still has structurally
Right.
really good bones, and you just bring it back up to today's market, and you put not only the money that you bought the house for, but then you force appreciate it to what everything is today.
Yeah.
And that's
Yeah.
boom, you've got to
Yeah.
win. And that's what we did for our first 2.
Yeah.
And that's what I look for.
Yeah.
And
You just got to
so-
make sure you've got the right people.
Yep.
Like I've got a team of contractors that go in and rehab and flip stuff all the time for
Yeah.
a lot of my clients.
I actually,
and so,
a lot of people may not know this about me, but I love construction. I built our house. I built most of the cabinets and did the trim
see,
myself.
so you have no excuse.
I
You
did
need to find a property
Zero. I
mean,
and you can
there's so much, and there's so
do
much
the work
that
yourself and save money.
Yeah, and I
I
hated
don't know
that.
about that. Not today. I'm getting older.
Yeah.
I
Yeah.
don't know if I
You
want
have to
all
put. I think with
but
the
I
first,
can oversee it.
I think
Right.
with the, I think with the first 2, if you're new, you need to do some sweat equity just so. I think it makes you appreciate your property more. But I'm telling you, man, I have a newfound appreciation for painters. I will never
man.
paint ever again. I
No.
painted 2 houses, me and Tracy.
That's one thing. When we built our
Oh.
house, I said, "Look, I love you. I'm not painting."
Oh man,
We're-
they're worth their money.
and we paid somebody to paint.
Yeah. I mean, I will say though that okay, looking at the properties, if you're getting into it, I don't know that I would start off with one like that, unless you have the skill set and you're in the business. I will say because if you can find a property that's newer,
More
nicer, more turnkey. Because the biggest enemy of cash flow is maintenance.
Yeah.
And it will
That makes
kill
sense.
your cash flow in a heartbeat.
Yeah.
It will take everything you've earned or you're going to earn and just take it away in an instant.
Yeah.
So, you know, I have different clients that look for different things. There's some and they really want new construction or really new houses with very little maintenance because they know their numbers are going to be a certain number and they're not worried about is the hot water heater going to go out and flood the, you know, attic and cause damage, or is this going to happen, or this, you know. And it can be little maintenance things, but it adds up.
It does.
And it can really kill your cash flow.
Yeah, and for full disclosure, the first two that we did like that Monique helped us find and that we found that were kind of distressed and kind of left behind, we had the money that was set aside for repair. You know, so basically what we were talking about is when I said the hard money was for a flip, my first two were basically flips, but like she said, we flipped and held it. And that's a strategy in the single family game. You can do flip or hold, you know, you can do $45,000 to $50,000 homes that people just put on HUD.
Right.
And then they'll do, you know, government will help them rent it, and then they get government assisted money for rent. I knew somebody who had like 65, 70 properties of those, but again, the same way with the same thing with financing and your risk tolerance is like what kind of business you want to run, because those houses, if you're self managing, and we'll get to that in a little bit too, tend to be higher maintenance versus somebody who's in maybe a turnkey and they're
less maintenance.
Yeah. So there's try to connect the dots on like the basic entry forms and what to look for in single family, and like what to know what business you want to run and how you want to get in the deal, and then what type of tenants you want to deal with, and how and then obviously your numbers. To go off what you asked her a while ago, why is it? It always seems like somebody says, I want to get into rentals and I want 10. Why? Why do they want the 10?
I don't know.
It's an old school. I think.
Like,
well, here's what.
You tell us, Trip.
Well,
what are you talking about?
Here's what I think.
I mean, you have that stream of income at some point.
10 was when back in the day when houses were like $100,000.
Oh, okay.
Everybody wanted $1 million of residential.
I see where you're going.
You know what I mean? It was
now it's not that way.
The $1 million mark was everybody's baseline. Like, I want to get into rentals and I want to have 10 houses at $100,000, and that would give me $1 million worth of real estate that is cash flowing.
Yeah.
I tell people now, I'm like, you don't need 10 houses to get $1 million worth of real estate. I mean, if a house is worth $250,000, $300,000, like, you got less properties you have to manage, and you're at your number.
Right.
You know, so you know, I think that was just a baseline that everybody knew.
Yeah.
You know what I mean? And
I mean, and the more you have, the more headache it is. I mean, I'm actually right now transitioning all of mine over to our property management department because I am tired of getting a call every Saturday from somebody, or Sunday, or you know. So I'm gonna let them
That's probably
start to
we'll
manage
get
it.
some of the dark side of it there.
That's the hard part.
We're going to get into property management towards we're going to get into all that stuff for sure.
Yeah.
All right, well, okay, so how does one get started into this game? So we know what the definition is. It's a singular house or 1 to 4 units.
I mean,
family.
you need a good, qualified, experienced professional to help you.
Yes.
To guide you.
Yes.
Yeah. Because there's a lot of things that a lot of agents may not even know to look for. Okay.
Yeah.
What are the covenants? Do they allow rentals? What's the lease like? You know, is it
if you're around the reservoir area?
Right? All kinds of stuff. What are the city restrictions and do they require inspections, and how often do you have to have certain do you have to have a surety bond on that property?
Pearl.
Pearl.
Is Rankin starting to do it now? I think they're looking into it for sure. Madison definitely taxes you to have it.
The city of Madison requires it, and theirs is more than Pearl's. But there's just so many things.
For our listeners that don't know what that is, what is that?
A bond?
What you're talking about with the that Pearl does?
Pearl makes you do
You have to
Surety
get
bonds?
a surety bond.
Yeah.
Yeah, it's up
What
to a
is-
certain
what is
amount
a
of.
surety bond. What is
It's
that?
like extra insurance, basically. So if
Gotcha.
if you're not managing it or doing
Gotcha.
well with the property,
Yeah, it's basically a surety promise or something like that along the lines that you are going to maintain
Right.
this property to the standards of what
I got you.
the city
right? Yeah.
says.
You got
So
it.
I think mine in Pearl costs.
$100, $85.
It's either like 100. I think it's around 100, maybe somewhere around there.
Okay.
Madison's is more.
Hey, we do surety bonds at the insurance center.
You do.
Little plug.
Little insurance plug.
Little
Little
plug.
insurance plug.
I plug myself all the time.
you know,
I actually
so things like
insured
that.
her last rental property.
Yeah.
too.
Did you?
Yeah.
That's
Yeah. So yeah,
Insurance plugs.
those are just
How's he
things to
doing?
look at.
How's he doing with that?
Great.
Is he
This
doing-
is not, we're not.
I'm just curious. I had to ask that.
I trust Trip. He
Thank
does
you.
a good
I
job.
trust you to appreciate
He's
it.
pretty good.
Oh, man. We do
But
this.
so there's just things that a lot of just agents may not know to
Yeah.
look for.
And those-
What taxes are, okay? Let's say
No, yeah.
you're an investor, they're not going to get a homestead exemption. So a lot of times when I would underwrite the properties, when I would send out an email when I send out emails to my clients and I'm looking for the properties for them, I'll send them a link and it'll include estimated rent. And not all agents are going to know that either. So I've done so many properties. I know what things are renting for, and there's not as many comps in MLS for rentals as there are for,
Yeah.
homes that are selling. So, I've learned the market that way. I let them know how old the roof is because we know that's really important for insurance.
Yeah.
Yes, we do.
So that's
a stickler these days.
I let them know how old the HVAC is because honestly, those are the two most expensive maintenance costs
Yep.
for a house. I let them know what the HOA fee is, and I also let them know what the taxes will be without homestead exemption because that's the price they're going to be paying, and so
Yep.
they can use all of that data to look and see what their cash flow is going to be, what they're
Yeah.
going to be paying, and what they should earn. So.
Yeah. You got to follow up on that?
So yeah,
No.
I'm going to follow up on something she said.
No, go ahead,
So,
go ahead.
And those are like a lot of little expenses that you
Right.
think, well, that's not a big deal. That's
Right.
$100 here. That's this, that. That stuff adds up when you're looking at your bottom line cash flow and you've got all these expenses, especially if you're doing traditional lending,
Right.
And you're on a mortgage,
Right.
That really cuts in your
well, that
cash
helps you
flow, cash
evaluate.
flow.
Does
Yeah.
this fit what I'm looking for?
Yeah.
Yeah.
That helps you get into your numbers, which we'll try to get into how we kind of look at those things. But the other thing to note is, going back to when you said interest rates, if you buy one as a conventional, which you can have up to 10 under
Right.
your personal.
Yeah. So
That's
don't.
conventional.
So I own 5 in my name.
Oh boy.
And Michael owns 1 in his name, and we
Okay.
kept them
Oh, cool.
separated
Okay.
because if you do them as a married couple, you're limited to those 10.
That's true.
So if you separate, and a lot of people don't know that, then I can
Yep.
have 10,
that's
he can have
interesting.
10.
Yeah. Okay. So we just picked up
So
a
you can
nugget.
maximize on the conventional loans.
We'll just
if
put
you-
them on Sarah's name.
Mess her credit up.
That's okay.
Well, here's the other thing too, and here's a positive because I get asked this a lot too, like, will LLC, create an LLC versus having them as a conventional? Because we just heard you can have up to 10 joint, or you can split them as a married couple, and then you can have 20.
Right.
And
It's interesting.
but what the conventional does is it gives you better financing terms.
It does a better rate.
And then it gives you the better insurance
Right.
rate.
Right.
For me, Tracy and I only have 2 under our personal, and then we have 4 under our an LLC. But what that does is that now we have to there's a trick, but what we did is we did a commercial loan, so we're paying about 0.5% to maybe a full
It's a full
higher.
percent higher.
Yep, when you do a commercial,
It is. It's higher.
and the terms aren't as long out. If
Right.
you-
It's
if you-
usually a balloon or something
Yep,
like that.
a lot of them are 5-year arms, or if you do get a fixed term, it's a way shorter term.
Right.
And so that's just something that's food
To
for
think
thought
about.
too. Yes,
Right.
because people are like, well, and that I think that's the big. It gets real muddy with LLCs and all that stuff. LLCs are great to have, but if you're just starting out, you don't have to have them.
Right. I mean, I have had clients, I'm not saying this is what you should do because I think it's risky, but that have LLCs, they buy them in their personal name, and then they transfer the title to their LLC.
That's what I didn't want to get into.
But I'm not recommending that because I think the lender could then
call your note.
Yeah.
I've never seen that happen, but I'm not recommending it. So don't say that I did. But
this is a full disclaimer. We are not recommending that practice. That's why I said buy it in the LLC like I did.
But yes, I did buy one in the LLC, and my rate was like 9%.
Yeah,
I did refinance it in my name. Like a year later, and it's at 7% or something like that. So way better. And now that one it went from being, and I also was able to raise the rent after some tenants moved out. And so it went from, and there's HOA fees monthly. So after all of that, I'm actually cash flowing between $800 and $900 a month on just that one.
Let's go.
And that's my best performing one. And it went from being like one of my lower performing ones, but that just shows you what a year can do.
Yeah.
You know, as far as you can always get the rent increase and, you know.
Let me ask you this. So, a little side note here. Kind of going back to owning your investment properties with personal instead of business. So, can a one spouse have 10 houses, the other spouse have 10 houses, and then you have an LLC that has
because once you max out those 10, then you're going to have to do conventional loans, and then it'll be, I mean, not conventional, I'm sorry, commercial. And then it'll, you know, you do it in an LLC.
Okay. Sorry, I just wanted to go back on that.
And then again, and look, I don't know anybody who has that many under their personal, because again, that's that risk tolerance, right?
Right.
I mean, I think people start out that way, like
You
when
don't want
we
something
did.
to happen and come fall back on you.
Because if you get, I mean, there is the risk with if something were happening in rental, you could get sued. They can get it, you know, everything primary. They can get into a lot of things.
And I have a friend who used to be in the financial business, and she actually said you should create new LLCs once you hit an equity of about 700,000, and then you create new ones.
Yeah, just to protect.
You shouldn't put them all in one LLC.
Protect blocks of your investment.
Right.
Yeah. And that's when and you can think about that's plenty of you got plenty of time.
I know some that do one for every house. They do, but that's a lot of
that's a lot of paperwork.
That's a lot of paperwork.
It's a lot of
and
BOIs
taxes
to do.
and all kinds of
Whatever
stuff.
that new thing
You got a good
is.
CPA.
Yeah. Oh, I have to use an accountant.
Yeah.
I wouldn't make it without one.
But I think, you know, before you scale to that, like people just want one or two. Definitely, it's, you know, I think that's how Tracy and I started. We put it in our names, and then we got a few years on them and got in a better position with them, and then we just we didn't transfer them in like the quick claim deed. We took them out of our personal and commercialized them and put them in the LLC.
Did you do them all together, like in one loan, like a commercial loan, or did you do them individually?
No, we did them individually.
Okay.
And now you can block them, but we didn't.
And that could end up being, if you had several, if you had 10, and then you might could get a better rate or a better deal doing them all together.
Is it smarter to block them all together?
I would talk to your bank.
Yeah, I would talk. See,
depends on.
I mean, again, it's how you want your real estate, your investing business to work versus us. Like, and then it's that risk tolerance. I didn't want all mine tied together.
Right.
If you know what I mean. Yeah. And so that was just one reason. Now, I may talk to some people in the next year or two, and they tell me a reason why. I'm like, oh, well, maybe that's a good idea. I mean, it's always changing.
I have an investor that I work with. He's bought about 100 houses with me, and he owns hundreds and hundreds of doors, you know, not just here, but all over. And he would pay cash for, you know, maybe 10 to 12, and then he would take them all and he would finance them all together like that and do, you know. And so I don't know exactly what all the benefit was, but for him, it was probably less paperwork, a lot easier to do.
Yeah,
you know,
maybe the interest rate was better.
And then he'd have an appraisal on all of them together, and, you know.
Yeah, I know there's ways. That's when you really scale up, though.
Right, yeah.
That's, I mean, from
that's
5
a
or 6 houses to hundreds of doors. That's a lot.
Yeah, that's what he does.
So the first thing we said, man, we went down a good rabbit hole, so we'll come back out. So we said, how to get started in this game? How do we get started in this game? Monique said,
find an expert.
Find an expert. So, okay, you got 3 of them here.
Yeah, that's right.
And
soon to be expert right here.
Right.
We're going to get you there. But yeah, so I would definitely work I mean, this is what we talked about last week. We were saying why use a realtor. Like, this is something you don't really want to guess at.
Well,
you know what I mean?
and they're going to, not only can they help you identify good properties, but they're going to help you find the right kind of lender that you need. They can connect you with property management, you know, and know who has a good reputation, who doesn't, you know, kind of the cost for that, you know, and just help you. You know, I try to make myself like a one-stop shop. Like, you come to me, I can give you all of this.
Absolutely.
You know, choices, how you want to do it, how, you know, what do you want it to look like, and then I can help you figure it out. I can get you the contractors if you want to do the work, or you know.
And that's a great segment and segue into. That's why you need an agent, which is the market research.
Yep.
Market research is because it's key. And then it just after
numbers.
So you're working on knowing your numbers. You're getting help with that realtor to figure out your location, where you want to be in the houses, the type of house you want, and then now it's the painstaking process of finding a house,
right?
Because it takes a while.
It can.
It
or
can.
It can be like that. If you're working with a really good agent.
I don't know.
There you go.
Like a rock star or something, you know.
But this just reminds me of a story. Sorry, I have to.
Is it me? It's not me.
No, it's not you. But it's like that. I had a client. He called me. I just literally he messaged me. I guess he found me on Roofstock or something and called me. And we sat there. He had never invested in properties. And by the end of the conversation, he was like, "Okay, I'm ready to buy something." He was like, "I've never talked with somebody for such a short amount of time and been willing to put all this money down on something." And I think we got him a house that week.
Yeah,
so
that's
you know.
Yeah, when you're in a stronger capital position, you can move fairly quickly. If you're dealing with lending, it can take a tad slower.
Yeah.
But the next step after you do all that research is find a home.
Right. That's right.
And I'm not just saying find a home like, oh, there's one. I'm talking about like what kind of property you want to be in, and then this is where the numbers come in.
Right.
So I'll give you an example. And Monique, so I'm telling you, this is kind of mine and Tracy's formula, and she helped us kind of build it, and we kind of we've tweaked it, and we still hold true to that now, but the numbers are just bigger and different.
Yeah,
so
but I think it's to me what y'all have is the best model.
Yeah.
At least that's what I have mostly sold.
Well, I appreciate that.
Yeah, it's the best model.
That's a good little
I don't know if it's right or wrong. Here's the thing. I don't know if it's right or wrong.
Right.
It's been right for us.
Right.
Yeah.
And we move a little slower. And
it probably looks different for everybody.
Well, sure. Well, and she can attest that too. So what Tracy and I look for in a property is we do want a property that we feel is going to appreciate. Mm-hmm. So we are willing to buy, and this may shock people, a market priced house. Mm-hmm. And people are like, oh, you can't do this game and do what? Yes, you can.
You can.
But that typically entails that we're putting down a significant portion of money. So whereas, and we had, our plan was to try to buy 1 or 2 houses a year. That was pre-COVID. Yeah. when it didn't take as long to save up for a down payment. Because like Monique, and like Monique does with her business, we don't touch our money in our business accounts. Rent comes in, rent goes into the account. We break up for taxes, reserves, and just whatever needs to be there for repairs, whatever else. So the reserves is the maintenance, and then we have a pile that we're trying to build for our next property.
I think that's very wise.
The problem I always hear,
I'm sure for a lot of people it's hard not to just reach in there and grab a little bit and go, I need a new
it's tempting.
Whatever.
It's tempting not to sell these jokers.
Don't lie, you do it.
Huh?
Don't
lie.
Just kidding.
Mine are always for sale.
Well,
I mean, I'll sell them.
Yeah.
And then I'll go buy another one. I'm just like,
I've said that, and then I'm like, but I can't buy this house for $120,000 anymore. So we've thought about selling a couple of hours, and then we've always put the brakes on it real quick because we just remind ourselves what our plan is, and it's a long-term plan.
Long-term.
So anyway, we look for houses that we think will appreciate in good neighborhoods. We look at them as if we were starting over getting married or something happened to us, would we want to move in the house? Yeah. So we feel like that's a good house to get in. But then we're typically, now outside of thinking about doing creative finances like HELOCs and stuff, when we put our own money in, we're gonna make sure we have 20% in so we can get our equity in and get a good start. So that's one of our barriers. Another one of our barriers is we used to shoot for like 10 to 12% on cash return. So the amount of money you put in versus what you start getting out would hover around that. If it didn't hit it, doesn't mean we wouldn't if we felt it was a good property.
Right.
Yeah.
But we definitely wanted to hit. So that's 3. And then the other two we looked at is a minimum of 1%, the 1% rule. So like if you bought $100,000 property, you could at least rent it for $1,000. Okay,
Which is almost impossible to find now.
It's really hard.
It can be done, but it is. You're going to end up with a lower priced property.
Yeah.
So
and then our last barrier is we want to get, and people may go, y'all are crazy, but we need at least $200 cash flow at the end of all expenses.
Yeah.
And that's low number.
That's low.
That's really low number.
I would really want like 300 probably.
Yeah, that's not that much higher.
I know. Well, and like I said, and the rent goes up. So I would probably settle for 2 if it's the right property.
Yeah. So out of all of our parameters, that's kind of how we judge it. Now, have we bought houses that have 3 of the 4, 3 of the 3 boxes are checked, but one's not? We bought the property? Absolutely. Because we felt good about it. It was a good area and it still worked out.
Right.
Those are just what our baseline numbers kind of look like. And then we have to adjust them for where we came from and where we are now.
Right.
So that's how we look at it, if that helps anybody.
So, explain to our listeners about that may not know the 1% rule. Like, and I'll follow up with that too by asking this question: is the 1% rule the minimum that you would look for in a house, or is that? I mean,
I think it used to be. Or it was kind of like the
It was
gold
like
standard.
Is that
like
general
that's it.
rule of
That was
does that
the
question
general
make
rule.
sense?
Yeah.
I just think because we've had so much appreciation over the last few years, it's really hard to find those types of deals.
Yeah.
Especially if you're looking for a good quality house that's going to appreciate. You kind of have to have a balance there. Now, if you're looking at lower priced properties, closer to 100,000, and you could get 1,000. It'd be a lot easier because there's sort of like a bottom to the rent, just like there's like a top to it, right? Like what the max you think in a market would stand for. There's kind of a bottom.
Yeah.
I would say 800 is probably like that. You could get a HUD voucher, 800, pretty much anywhere. There might be some that wouldn't. But pretty much, I would call that kind of the bottom. So, if you're looking at lower priced houses, you might could get something for $100,000 and rent it for $1,400. But that house is going to have a lot of maintenance stuff. It's going to cut into your. So I like Trip and most of the investors that I've worked with. Sort of what I try to present to them as a balance of the two, appreciation and cash flow. You want cash flow, but maybe $200 a month is okay, like that, because you bought a good quality home. You're not going to have very much maintenance on it, and it's going to appreciate over the years.
It's the appreciation game you're playing right there.
So there's sort of a balance there. You're also the higher rent you get, you tend to get better quality tenants that they're going to have steady jobs that can pay the rent. They're going to take care of the property, and so I kind of like if you could be in the middle, right? Location. You're going to be in safer areas like suburbs, that sort of thing. So, and you just tend to get less calls. I don't know, calling you up on a Saturday when it's a higher quality property and the tenant, they can handle things and they're just less needy.
For sure.
And I think with those tenants, you put boundaries in place too. Like I tell my tenants in my house is like, I don't change light bulbs and I don't plunge toilets. So if you call me out here for that, I will charge you. Because what I tell them is like when I put somebody home, I'm like, hey, here's the deal. No news is good news in my opinion.
Right.
And so, but we're all adults here.
Right.
Like we'll leave light bulbs behind and we provide plungers. I'll be like, I fully expect you. Now, if water is coming up through the pipes and drains, or there's water coming from the roof, or something extreme's happening, call me. Within 24 hours, we'll have somebody out there. That's something else Monique said. I've built a team I've got a lot of contractors, plumbers, electricians on speed dial. And I've got people that I've referred a lot of business, so they, you tend to get somebody out there quick, and that's something you just work on as you do this.
Right.
But so I think if you set that precedent with your tenant, then you limit the phone.
Now I'm handing it off.
You limit the phone calls. You know what I mean?
Right.
And
And it's been my lower price ones that I've had the most trouble with.
Yeah.
Yeah.
So,
That makes sense. Though.
Well, so anyway, but going back to finding property, that's what I'm talking about when you find a property. Like find your parameters and make sure you work within those. Because if you decide to go against how you feel like your property is going to work for you, then you're at higher risk to lose money.
Right.
And to your point, people who get like sticky fingers in their business and want that money out. I've had people who are like, man, I used to do that and it was terrible. And you hear all this and they're like, what happened? And then come find out like they spent all their money that they were getting, and then they had a big repair issue and they almost bankrupt them or something.
Yeah.
You know, they had to get rid of it. And they're like, I'll never do that again. So there is a touch of discipline to this, because regardless of what, in my opinion, you hear out there about, oh my God, they got all these rentals and mailbox money. First of all, there's nothing passive about it.
No.
And number two, it is a get rich slow. It's a marathon.
I'm looking as an investment the whole time. It's not just like the income, the monthly money coming in.
I like the thought of building wealth for later.
Right.
You know?
100%.
You know, one day those houses are going to be paid for fully if they're not already, and you can sell them.
Yeah. And I would encourage Monique started doing it. I would encourage any realtor to do it, because we don't have a company 401k, and you heard David Ostrander say that in Summit when he was talking about and there's a lot of realtors that are good at what they do around here, and they don't have a single one.
Right.
And I think it's another part of the business that can be lucrative for even a realtor.
Right.
It gives you another stream of income.
Why not? We're right in the middle of it.
Right.
We see all these houses that would be perfect for it all the time. So I think it's very wise.
So market research, find your property, figure out your financial parameters, and go into that. I would say my honest opinion is do the conservative approach, and once you learn, then you maybe start HELOCing.
Start doing a little different.
To scale, because everybody wants to scale it, you know?
Yeah.
Because it is a single family to multifamily, but man, that's a whole other topic.
Yeah.
And I think we talked about letting in the finances or whatnot. So why don't we just talk about property management, since we're hitting all around it?
Really.
To
do or not to do.
Yeah, to do or not to do property management.
Well, I've learned a lot of lessons this year. I mean, I was able to manage it myself because I'm in the industry and I'm, help with a lot of that. Anyways, I can rent them out myself. But I will say that it is very helpful to have a property management.
Yeah.
They're probably going to rent it faster. So you're going to have less vacancy. There is a cost to it, obviously, but you're going to have less headaches. They're going to, there's something about having someone in between you and the tenant to say no or to create boundaries.
That's a good point.
Yeah, because it's harder for me to say no to somebody personally when they're calling me
100%.
than it would be if my property manager was like, no, that is not our policy,
Right.
And I've been there.
Yeah.
Keep going, though. This is great.
What other? I mean, it just gives you back your sanity.
Yeah, less sleepless nights, and
right.
We're trying to encourage people to do this, not discourage them, Monique.
Well, I did it at a really rapid rate. Okay, but I mean, I do think property management is good to have. They're going to take care of it. They also have the contractors. They can get multiple bids quickly on things. They'll have people that work on the weekends. If, let's say, the AC goes out, they probably have somebody on call that they could send out there and help. So it's just, and especially for out of state clients, it's hard to manage a property when you don't live locally.
Well, I think if you're out of state, that's a must.
I have some that do it.
Wow.
I do. And she owns, I think she's probably bought 12 to 15 houses with me, and she does it all.
Wow.
And she rents them out pretty well, but
I'd be a nervous wreck.
But they're new construction.
Oh, okay.
So there's not very much maintenance. The first year she can call the builder. They're going to take care of the things that are, within the builder's warranty.
Yeah.
So, that's probably made it easier for her. Maybe eventually one day she'll get to the point where she needs a property manager. But
I need to put a disclaimer out there again, where she's talking about one of our out-of-state investors, but we are talking more local.
Yeah.
If you need to get in the local game before you think about doing anything out of state.
Well, we have a great market here anyway.
We have a great market
So
here.
there's no need. I've thought about that, and I'm like, why would I go out of state?
And then, like Uncle Dave says on the old Ramsey show, you don't want to get a property out of state you're not close to, and some dude's changing his Harley oil in your living room.
That's right. Yeah.
Which would probably be me.
But I would say, and if you decide to use a property management company, vet them. Look at them, because they are not all the same.
Yeah.
And there's some with
are created equal.
Right.
Yeah.
Just like realtors, there's.
That's exactly what I was going to say. Takes one bad apple. We've said this in multiple podcasts over, and now we're talking about property managers. It just takes one bad property management company.
Would you say you get what you pay for?
Yes.
Ooh.
Okay.
I would say
It's a great.
the things that I would look for is communication. Can you call them up and on their cell phone or in the office and get somebody on the phone right away, or do you have to go through a whole automated program? And how easy can you talk to your property manager? I mean, that's a really key. How do they advertise those properties? Do they just put it on their website, or is it going in MLS? Is there maximum exposure, because that will give you maximum market rent? Other things, what kind of contractors are they using? I mean, you could Google and look at different ones and see if they have a reputation.
Yeah.
What is the work they do? Are they upcharging you on the repairs?
Ooh.
That's a one that I've come to realize that some are not honest.
What's a bad one we can tell our listeners? I'm just kidding.
I really want to say something right now.
No, I'm just kidding.
She almost did it.
I feel it.
Oh, it's
I
up.
feel it.
Never mind.
We better not do that.
No.
Hey, real life, real talk, real estate.
Yeah.
That's our slogan.
That's our slogan. That's right. Yeah, we're about to put it all out
I'm
there.
totally kidding.
But that's an important one. Are they honest with you about the repairs and the costs? Are they upcharging you and getting a kickback?
Yeah.
Because there's a lot that do that, and you don't know that they do that. So
I don't have a whole lot of
communication.
I don't have a whole lot of experience with property management, because Tracy and I still self-manage our 6, and so, but don't. I think the one time I looked into it, I was figuring, I was talking to how it works and how much they charge. Like, there's a certain fee for if they vet tenants and put them in on the first month's rent. Maybe
so it's usually somewhere between 8 to 10% of over the year. That's what they charge a month to manage it.
Yeah.
And it usually depends on how many you have. If you're just 1 or 2, it's probably going to be closer to 10%. If you've got multiples, then they'll probably reduce it. Right. And then they'll also charge you for when they signing at a lease, they'll charge you typically like 1 month's rent is the fee for that. Yep. Or if it's like a renewal, maybe they'll do 50%, something like that.
And then what I remember, this may have changed, and this is a good point, because I didn't think about the upcharging on repairs. There was one company I talked to, and this has been on I can't remember exactly, but they said if a maintenance call comes in and it's below a certain threshold, we'll just do it out of your account. Don't even worry about it. But if it gets above a certain threshold, then we'll call you and say, hey, if it's a higher. So that could be part of that, like how many times they nickel and dime you don't really know.
Are they sending you receipts directly from the contractor, or are they just sending you the cost and you don't know?
But again, this is not a passive business or an investment in my opinion, even though people think single family is like mailbox money, because even if you have a property manager and they're helping you with all that, hey, quiet down over there. Even if they're helping you with that type of stuff, you still have to manage the property manager,
right?
And you still need to be looking at your books,
right? You need to keep up with everything.
Yeah, you just don't you just don't go like, okay, it's taken care of and I'm out.
Right.
I want to swing back around with something. Side note, something. Hopefully this isn't going to be too big of a rabbit chasing.
Let's go down another one.
When you got started with roofing stock and beginning to get into looking for investment homes for investors, is there some magical formula that you went and you learned from somebody and that's kind of what everybody uses, or is that just different from everybody?
I don't know. I just learned it on my own. I just knew.
She learned it from me. She already said it.
That's right. That was sort of like all the parameters, like what I would look for. I mean, when I would search through the hot sheets, a property would pop up. I automatically knew, okay, this neighborhood allows rentals. It's got to be at least a 6-month lease. So there were things that I already knew. And if I didn't know, I was pulling the covenants, reading through them. And I actually have a whole file of covenants just for all the neighborhoods around. And those change sometimes too. Yeah. So you have to be careful.
Yeah, they do.
So I would just automatically note location. Yeah. This is a good location.
Yeah.
I would have
Would you say that's your top?
Yeah, location's important.
And looking at what you're looking for.
Well, it depends on the price range. But when I was doing it for roof stock, there was typically they didn't want you to go. Honestly, most of the agents in the different states put a lot lower end properties in. They would input those. I did. Most of mine were selling around $250.
You did better, yeah. I remember.
So I had an higher average of the prices, but it's because the cap rates were good on those. Like I found better quality homes, and they were all kind of surprised by that because it's Mississippi. So they're thinking cheaper properties, and then here I was selling higher price points than a lot of the other states were.
Gotcha.
But it was sort of that thing like what's a good quality property? And so when I would look through the properties, it's like, okay, that's a good neighborhood. They allow rentals. Is it 3 bedrooms, 4 bedrooms? And that automatically affects the amount of rent you're going to get on a property.
Yeah.
I would say on average, if it's 4 bedrooms versus 3, you could probably get $200 to $300 more a month just for that 4th bedroom. And then square footage, and I had a lot of understanding about the rental market. So I kind of knew off the top of my head, this is my estimate for rent. And so if those numbers looked pretty good, the price compared to the rent amount, then I would say, okay, let me investigate this further. And then I would, go through the disclosure, look and see how old the roof is, all the things. Has it had foundation work?
Right.
What kind of shape is the house in?
For sure.
And then look at taxes and, is there flood insurance? Things like that what's the cost? Is there leasehold?
I heard recently an investor say, I was watching another podcast or a show, I don't remember exactly what it was, but they said if you find a house and you just know this is going to be a great house and you don't have to write it on the back of a piece of paper or write down some kind of formula, then that's the ones you want. That's the good ones.
Right.
Does that make sense? He said if you don't have to do a formula and you look at that house and go, that's going to be a good one, that's going to be a good one.
Yeah, and that goes back to location too, probably. Being in a good area.
And then they changed their system and they tried to come up with a program to identify properties. Okay. So instead of having a person do it, they had this program do it. Well, I started getting less and less leads because the properties were not good properties. They might have looked good if you do a formula. But when it came down to it, that property had foundation work done. The numbers looked good, but they weren't. It just wasn't the same. So I think it really does take.
Or they hadn't had foundation work done.
Right, and it needed it. And when you're like, oh yeah, at that price and what they think the rent would be, that would be a really great investment. But it came down to it. It was not a quality house.
Going back to
sorry, I went down a rabbit trail.
No, this is perfect. I mean, there's so much that can be talked about in the single family space. But she mentioned something like this is another thing about using a local, using somebody, an expert. And because we have a house that's on land lease, and I just last night wrote an $890 check. And again, if I use my income that's in that bank account, it's going to be hard to write that. Because you do have expenses that come out, and you do have repairs that come out. Right. So that's probably one of the properties that we almost didn't pull the trigger on. We ended up doing it anyway because we're like, oh crap, land lease. And we didn't figure that into our numbers up front and because we just weren't thinking.
Right.
I actually didn't think that neighborhood was tied into it. I was like, wait, this is land lease? Reservoir was like way over there. But anyway, so that's a whole good point. And her basic point is when she's looking for these properties, she's trying to figure out what are all these expensive, what's it going to look like after it's all said and done and how it cash flows.
Right.
It's almost no different than looking for a house for a buyer and a seller, a buyer.
Right.
But you're just looking for a few small nuances that are different for an investor.
And so the reason for my question is if you get online and you're just curious about investing in single family rentals, there's all these videos about these crazy formulas and these special formulas. You can go down a rabbit trail with that one.
Well, see, and that's what they started using, and I'm telling you, that website is kind of dried up because of it. They took out the agents that were the ones putting in the properties.
That's good news because that's less math I got to do.
Going.
I'm just saying.
Kind of the guy you're talking. I'll say something real quick, and we'll kind of wrap up property management. But like, a good way that people can get in the game is they're in their first home.
Right.
They build up equity.
Oh, I kicked myself.
Yes.
We didn't keep.
You
our
know where
I
I'm
wish
going
I'd
with
kept
this.
every house we sold.
Gosh.
So what I'm saying is that you can get in your first house and you're looking to make a move and you're like, well, we're going to sell our house, use this equity to go buy the next one. You can do that, but all this stuff takes discipline because if you have money that you can just put towards the next house. Or you can
borrow it from that house.
Take the equity from the house you're in, go buy it, but keep it, and then rent that one. That's how people
they've started that way.
Yeah.
And that's a great way.
I know people that have done that and then gone to the next one.
Right.
Held that one for about 5 years.
Right.
Same thing.
And then you're going to have a lower interest rate because you're buying it as an owner.
Yep.
Right. Yeah.
So that's a good way to do it too, folks. If you are like, well, it's going to take me a while to build up. Like you might be able to do it in the home you're in.
Right.
Yeah.
So I'm not saying that's for y'all. Y'all just built.
Well, I'm glad we did what we did because we wouldn't have been able to have the property that we have in our house now. So it all worked out. It's all God's plan and timing and everything. But it was we took our equity and we bought property with it.
Yeah.
And we rented for a little while and then for a couple of years and then we built.
Yeah.
And so we built what I feel like is our dream home on 10 acres of land out in Pisgah.
Yeah.
Our kids are in a grade A school district and all that is just a blessing and it wouldn't have happened if we wouldn't have sold and did what we did.
And all of that's an investment.
Absolutely.
100%.
And with me building a house too, we got a lot of it appreciated quickly because I built it and so I saved a lot.
Sure.
On building fees and things. So we have equity in that house and so
now you can get started and buy a rental.
Yes.
Here we go.
I'm so excited. I can't wait for we got to refinance before we do that. Maybe we don't, but we feel like it's just a wise thing to refinance because our interest rate is 8.5.
Yeah.
We started building when it was 2.8.
Yeah.
It was 8.5. We're like, what are we gonna do?
Yeah.
So now we're like, are we house poor? We're not house poor.
Old interest rates.
But it's doable, even with higher rates.
Yeah.
Well, so all right, I'm pulling this back to property management.
Yeah.
Wait, I have a question for you.
Oh.
How do
Nobody's
y'all
done this to me before.
on the taxes? Okay, the tax side.
Yeah.
Because I've had a lot of clients now. They do like the rapid depreciation with their taxes. Do y'all do that, or do you do it over the 20 years or whatever the accountant does?
That's a great question for Wyndham and Lacey.
I'm just curious because I haven't done the rapid, but I'm going to look into it.
I don't think we do the rapid.
And I don't know if it has to do with how much income you make, if it matters. But they'll do it for 7 years, and then they'll turn around and sell them. So anyways,
That's
I just was curious.
I'll have to look into it. I don't think we do the rapid.
Yeah.
My CPAs are trying to tell me not to pay them all because we're in pay down mode. I'm like, while I can't buy right now, I'm paying these suckers off. Yeah. I've always told people because I know the benefit: appreciation, cash flow, and tax write off. I tell people all the time, I don't care about tax write off. If I have 5 to 10 paid for real estate, like I'm gonna write off repairs and all that stuff anyway. I will pay Uncle Sam the rest because I want the cash flow. I don't care about the write-offs because I'm more risk. You know what I mean? I'm a little more conservative, so I would rather have the full paid off real estate and then then the cash flow works quicker. So I'm one of the weird ones is like the tax stuff, the tax tricks, I don't care about. That's kind of so I don't know. But I will have to look into it. But we're so close to having 202.
Which my accountant hasn't done mine rapid, but I'm starting to think maybe I want to do that. Let's say I want to sell my property, like I'm not tied down to it. Like there's a couple that I probably will sell. So why not get the full benefit you know,
makes
now
sense. Yeah,
and
makes
sell
sense.
them.
Yeah.
But I don't know. I'm going to talk to your CPA, but I'm going
Yes.
to talk to my CPA about it
That was
and
a
see
great
if there's a
question, by the way.
reason
That's a great
for,
question. I
because
don't
some
know.
of my clients do that, others don't. And I don't know if it has to do with the amount of income they make.
Yeah.
So it's more beneficial for them, you know, or if it would even make a difference.
If we got any
For you
single
and me.
family investors out there that are going to listen to this, drop
Yeah.
us a comment
know.
about rapid
Yeah.
Depreciation.
depreciation.
Yeah, please.
For your
Please
taxes.
leave
That's a great
comment.
one. I have to look into that.
Yeah.
I was going to say, though, a way that we save on our expenses is that's why Tracy and I still self-manage these things. You know what I mean?
it
And so
does help.
we do have we don't have a number of like how many houses we want to own. We do have a number like if we were to get to like 8 to 10 properties, we probably would look at property management.
Yeah.
At a point, like we're
I
just
think
like,
6
hey,
is my threshold.
Yeah. Oh, I'm
Well-
sure it can be a lot.
So I've had people say, "Oh, you do rentals?" Like I don't want to do that thing. I didn't thought that was off. Sorry. I have real life.
Yeah. Yeah.
I have people say, "Oh, I did that for a little bit, but I got all these bad calls." And I just tell people like, if you're going to let a plumbing issue get in the way of you like a long-term plan of building wealth, then like.
Yeah,
I
no, you
get
can't
it.
let that get in your way.
The thing that you said though about real estate, which a toilet again, self-manage. I tell these people all the time. I'm like, do you think I'm going out there and fixing the plumbing problem? No, I call one of my plumbers.
You do a good job of setting the boundaries up front.
I do, and I'll call one of my plumbers. I'll get somebody out there very quickly.
Right.
But my bank accounts, I pay the plumber to go do his job,
Right.
and then I use that as a write-off.
Yeah.
And it's a cost of doing business.
Right.
People
right.
think, well, you know, I'm not leaving my son's baseball game to come fix an electrical problem or a plumbing problem. I'm going to call one of my people
Right.
that do help me. And,
Right.
and that's part of the managing process.
Right.
So anyway, but that's just how we save on some of our bottom line with the houses we bought. You've got a different plan. And that's what I say I love about all this. So I property manage. You're about to get out of it.
Yeah.
Works for both of us.
Well, and we have
So-
property management.
Yeah.
So I
and
can
your
easily,
brokerage.
easily.
That's also a
transfer.
plus.
Yeah.
Yeah. Yeah.
That's
I mean, that's
also a
part of
plus.
the benefits of being in the business.
Yeah.
For sure.
So what's your opinion on before we wrap this up? Like we talked about, you can get into it.
Right.
It's still a very feasible way to build wealth and to grow your investments
Mm-hmm.
outside of stocks. Well, that's what I like about real estate too. It's tangible. You can go see it.
Right.
You can help the appreciation.
Yeah.
You get paid a dividend monthly.
Yeah.
You know, I don't have many of my like single stocks doing that.
Yeah.
Yeah.
But anyway,
No, I say it all the time. There's no savings account like a home.
exactly.
Right.
Yeah.
I mean,
Yeah.
So what do you
whether
think?
you're investing or not.
Yeah. So what do you think holds people back? We've just said you can still get into it. It's still a great investment tool, and you know, there's all kind of ways you can branch out from it once you get in there. So what do you think holds people back from?
I just think lack of knowledge that
Yeah.
they don't understand that it's pretty accessible and easy.
Yeah.
You know, so they're just not knowing,
Yeah.
not having the right people to show them what to do.
Yeah.
And maybe the fear of just, you know, having that other mortgage if something
Yeah.
happens.
Yeah.
Yeah.
But, you know, I think that can be
risk
overcome
side.
with knowledge. Yeah.
The risk,
Yeah.
knowledge.
I would agree with that. What I would tell listeners again, talk to an expert,
Right.
Professional.
start learning numbers, and then do a deal and see what the exit strategy. If it all goes bad,
Right.
sell the house.
Right.
Sell
That's right.
Yeah.
Sell the house.
Yeah.
And guess what? We'll be glad to solicit.
Yeah. I've sold a few for
Yeah.
investors like
Yeah,
that. They
for
bought
sure.
a house,
Yeah.
the neighborhood changed their covenants afterwards
Oh boy.
and
Sell it.
restricted, and they sold it and they made money. So, you know,
Win-win.
I mean, real estate. Obviously, we all like real estate because we're in the business,
Yeah.
you know,
Yeah,
but it's a great opportunity for anyone.
So they made money off the cash flow,
Right.
While they were holding
Right.
it. They
The mortgage was paid for while they held
boom,
it. Yeah.
and then they sold it.
And made money. Yeah.
That sounds like a triple win to me.
Yeah.
I don't know why anybody wouldn't do this.
Yeah. Yeah.
I'm glad you started. You know, Monique told me she's like I did it. I bought my first one, and it was literally not all that long ago.
No,
and I
it
was
was
like, well, it's about time, Monique. And then I
Yeah.
called her the other day. We were talking about she has an investor that I do insurance for too.
Uh-huh.
And I was like, hey, how are your rentals going? She's like, oh, I'm up to 6. I was like, 6? I was like, you just bought one. She figured it out quickly. She was like,
Yeah.
I have missed some time and I'm catching
Yeah,
up.
I'm trying to
Yeah.
make up. I just see all of these investors buying these
Yeah.
properties, and I'm like, God, why?
Yeah.
Why did
Yeah.
I wait so long? So,
And again,
and honestly, it was just taking the first step was
that's the hardest. That's the hardest.
It was like, oh, calling the bank. What's it going to take to get a
Yeah.
HELOC or a second mortgage? Like that was really scary because it felt risky.
Yep.
But
And the
it's
numbers are big.
paid off
Yeah.
so much. I mean, I was able to buy 2 back to back.
Yeah.
Just
Well,
like that,
and
so.
that goes back to mine and Tracy's story. I remember we signed these papers, we handed it over, Monique's like, congratulations. We're like, yeah. And we left and we went to McBee's and we had a beer. We sat there and looked at each other and we're like, what did we just do? We're like, I was like, Tracy, we just bought a house we're not going to live in.
Yeah.
And the funny thing was, is we were so like, okay, we did it, but we don't know what to do now. And then it was like, time is money.
Right.
We got to get
Get it done.
because it needed.
Yeah.
And so
Work.
Monique
Yeah.
actually helped us get the people in to fix it up.
I don't even remember all this.
Now we go into a closing. We're like, just give me the papers.
Yeah.
You know?
I'm like, what? Like Michael will come in to sign because they've made him personally guarantee some stuff.
Yeah.
But it's in my name.
Mhm.
And he'll just be like, I don't even know the address. I don't know what I'm
Whatever.
signing, but okay.
I mean, I'm committed now. The thing is though, but to get to where we are in the comfort, you have to start, like you said,
You
the
just gotta
first
start.
step, and then you learn as you go. There are going to be
I've
mistakes.
learned. Yeah. Yeah.
But those mistakes are recoverable if you're disciplined.
Right.
I know it sounds weird. Leave your money alone in that separate account so you can manage these because one day, because you were planning for that one
Yeah,
day,
yeah.
you can liquidate it all and take everything, whatever, or you're going to have a nice cash flowing property.
Look, one thing we haven't talked about is vetting tenants.
Oh, let's do that real quick
Oh.
before we
Because
get to...
those are the biggest lessons
Yeah.
I think I've
Oh my
learned.
goodness.
Yeah,
And,
let's
and
do
it's
that.
cost me the most.
I
Yeah.
almost skipped this, and this is important.
Yeah, that is great.
Okay,
Yeah.
we're going to let you lead
I
it.
think
I
we
mean-
actually were talking about it.
Well, I've used a program called Rent Spree, and then of course, if you have a property management company, they'll do this for you. But you
Yeah.
need a background check,
Yes.
credit check,
Yes.
and proof of income.
Yeah. I'm softer on the credit check.
Well, I can be soft on it too, but I want to know why. Like
Yeah.
there could be a lot of reasons, and I'm sympathetic. But the more that I've rented out to people, I'm getting less sympathetic.
Yeah.
Because
Oh, yeah.
I've had so many headaches,
Yeah.
and evicting tenants is the worst part of it, and it is
sure.
time consuming, and it is a lot of loss of income.
It
you know?
is. It can tie some things up for sure.
I'm sure that can get emotional too because
Yeah,
you're kicking somebody out of
right,
a home.
and it's
not,
hard.
Not only
What you have to understand in that aspect is that if you've done your due diligence, trying to communicate with that person on whatever the reason it is that they're in trouble, but if those people just ghost you, and what I would say is document everything for court if you
Right.
have to go that way.
Yeah.
But at the end of the day, if you've done everything that you know to do to help that person get back on
Right.
track or to help them get out of the house so you can re-rent it, you have to look at that and go, hey, at the end of the day, I did what I could do. This is not my fault.
Right.
Because there is another person, and maybe a family on the other end. And we've had people we've had to evict, and it was not great, but it ended up working out. And then we had just people that just like, hey, we're about to evict, and they just left and
I
ghosted
wish
us.
they would leave. I've had two
And-
that I had to get out of the house, but
Yeah.
they
Oh
my
refused
gosh.
to move out.
Yeah.
And one lady, I think she was just a scammer. Like, I think she did that. I found out she had falsified her previous landlord's phone number.
Mm-hmm.
So when you called, you thought you were talking to our previous landlord and found out it was not. I've even had
it was her cousin.
it was probably her. It's probably her or yeah, her
Yeah.
cousin. I had somebody. So I learned a lesson there, right? Okay.
Yeah.
So now that we have Forewarn,
Yep.
I'm checking phone numbers
Oh,
on
yeah.
references,
Yeah, I did
and I
that too.
caught one lying, and it was her own phone or it was her son's phone
Oh.
that she put in as her landlord.
God.
So right away, I said no to her because I had had the experience before of
Yeah.
people, you know.
Well, if they're going to
but-
be lying to you from the beginning,
Right.
that just-
Right.
Yeah. Yeah.
So you
See
just
ya.
have to really be diligent,
Yeah.
and really vet them because I've
Yeah.
had some bad experiences.
So if you've got a property manager, this is the plus of what they do.
They will do this
they
for
do it
you.
all for you.
Right.
And the other thing
Good
about
leases. They'll have good leases.
they will. And the other thing about property management, I don't know if you said this. I'm sorry, but I don't know if we did. The legalities, like the
Right.
legal side of it, property management has usually on point for you and
Yes.
stuff. So
They'll have great leases that protect you.
yes,
So
yes.
that, you
Now, on the flip side, if you're like me and you still self-manage, what I will do is yes, I do the background check. I'm a little softer on credit because what if somebody's trying to work out of that?
Right.
But,
And there's a reason they're renting.
but
and that's usually the credit.
That's right. And then I get references as if I was interviewing them for a job. And I will call the employers. I will call everybody put on there. And I ask them, their employers, not for the full income, but just to verify the ballpark if it's around what they're saying it is. I usually don't have trouble with that. And then they say, yeah, if I had a house, I'd put them in it. So that makes me think, okay, their character, they're showing up to work, they're doing the deal. But what I like to do is I'll throw an open house, or I'll schedule a bunch of times where I'll have the tenants come in and I personally meet them.
Right.
I want to look
It
at
helps
people.
to meet them in person.
It
really
helps,
does.
in my opinion, because you get that first impression,
Right.
that gut feeling like, okay, this person's legit. And it helps, like, applications up front can weed out bad ones.
Right.
And then if you say, come meet me at the house, I've had people not show up. I'm
Right.
like,
And you're
well,
like, no.
that worked out.
And that's something, too, that we started implementing with our property management department is that you show them in person.
Yeah.
Because so many times these property management companies will just give you a code to the
Yeah.
lockbox. They never go meet them.
Yep.
I want them to go meet these potential tenants because
Lay
you learn a
eyes.
lot that way. Plus, they automatically create a relationship with you, and I think you actually run it faster
Yeah.
if you're meeting them and showing it to them in person.
Yeah.
So,
see
but,
that.
And I have to spin this real quick for the tenants. Beware of scams out there
Yes.
against you guys, because I had a house that we were turning over. We hadn't watermarked our pictures yet, and this was led us to watermark our pictures. We had a house we were turning over. We were in the middle of the turnover, and then my mother-in-law happened to be at the house because they were in town, and she was walking through it, looking at what the painters and everything were doing. And this lady, this girl walked in, and she was like, "Hey, can I help you?" And she goes, "Yeah." She said, "I just saw the doors open. I'm walking. I just wanted to see what this house looked like." And she goes, "Oh." She's like, "Well, have you filled out an application, or you got an appointment to meet somebody?" And she's like, "No, I'm about to rent this house." And my mother-in-law was like, "I don't think you're about to rent this one."
yeah.
Yeah.
And she's like, "No, I've been talking to the owner over phone and through text." And she was like, "Well, who is the owner?" And she said the guy's name, and he was like, apparently from South Carolina. And my mother-in-law was like, "You need to call my son-in-law."
Yeah.
And so I get this phone call, and this girl's like, "Hey, are you the owner of this property?" I was like, "Yes." And she's like, "Is it for rent?" I said, "Well, not yet. We're flipping it over." She told me what was going on, and I said, so this guy was saying, "Hey, drive by this." What he did is he got on that he was searching listings,
Right.
And he found an old property of ours, and we happened to about to be
Put it on
relisting it.
Marketplace or something.
And he took our pictures and put it on Craigslist and Marketplace, and he started marking the property, but for like 200
Discounted rent.
Yes, he discounted our rent. This girl calls, they start talking, and he says, "Hey, go drive by the house. I'm having to be out of town for XYZ on business, but if you like it,
Pay the deposit.
pay me the deposit, send me the deposit, and I'll mail you the keys." And I said, "Do not send him
Never do that.
anything."
Never do
So
that.
yes, tenants, never mail anybody
Right.
deposits if you haven't met, that thinking you're going to get mailed
Right.
keys. Like, just beware for yourselves that, like,
And if the rent seems too good to be true,
It is.
Probably.
It is.
100% is. So anyway, that's just kind of a beware for tenants,
Right.
potential tenants out
Right.
there and whatnot.
Yeah.
It's a crazy story.
All right.
Yeah.
I've got so earlier. I'm gonna change subjects here. Earlier, you were telling us about a story about something. Was it your biggest mistake?
Oh,
You want to talk
Lord.
about that?
I don't know if I want to
You
share
wanna
my
say?
story.
You gotta
I'm going
give
to
us-
look
You
so
wanna share?
terrible.
You got to give us a funny or the biggest mistake story you've ever done.
I mean, I'll share it.
Yes.
So no other agent does what I did. But
Great
it
content,
was,
right
It
here.
was,
but they can learn. This is the
This
real
is what
estate
it's all
community.
about.
We
Real
want
life,
a community
real
for
talk.
all
I
of them.
know.
So we're
I
gonna
hope
do
I'm
it.
not putting you on the spot too.
Well, so I had an out-of-state client,
Her dad's gonna be like, "I can't believe you said that."
Can't believe you did.
and he wanted new construction. So I found a property. It was not completed yet. So we had the plans, the description from MLS, and it was a 4-bedroom, 2-bath home. I had recently hired an assistant who started doing, like, we had the home inspection that was completed. She went to go do the walkthrough. And so she's there checking all the repairs. I never walked through the property. But she takes pictures, we do the whole thing. We send it to the client. So we close on the property. Property management team picks it up. They start marketing it. They get a call one day, and they've gone through the property. They've walked through it too. They get a call one day from a potential tenant that's there, and they go, "Where's the fourth bedroom?"
Oh, no.
So come to find out, those plans were not the house that was built.
Oh, no.
Oh, gosh.
So he bought a 3-bedroom, 2-bath instead of a 4-bedroom, 2-bath.
That is a minor.
And no one caught it.
Oh, no.
Oh, my goodness.
But who would think that you go do a walkthrough and you're counting bedrooms? I mean, it's just not something that you typically would think about,
No, for sure.
So talk about, whoa, we messed this up
How do you
majorly.
crawfish out of that one?
Yeah.
Well, so, my dad is the broker, and he goes, you know what? We made a mistake. It's our fault. It's ours and the listing agent's fault because they put the wrong information in. And he said, this is exactly what we have E&O insurance. Tell them to file a claim and we will just settle it because we owe it to them. And so I was just really honest with the client. Yeah. Since then, he has sold and bought many more properties with me.
From you.
Wow.
From me, because he really respected the fact that I just owned up to it.
Owned it.
We made it right.
Yeah.
We did the best that we could.
Yeah.
And it's been a great rental property for him, even though it was only 3 bedrooms.
It worked out after all. So your mistake.
So when you do a walkthrough, count the bedrooms and the bathrooms.
In a new construction.
Yes.
Yes. I
That's
understand.
that is not as terrible.
I thought it was going to be a lot worse than that.
That's whatever. That's terrible.
Yeah. But I thought it was going to be way worse than that. But I mean, that's something that you could easily do because you've got plans that say this,
Right.
and you're looking at the plans and you're going, okay, it's a 4-bedroom.
I mean, even if I had done the walkthrough, I don't think I would have even caught it because you're there thinking about repairs.
No.
You're not
Punch
thinking
list of
when you
whatever.
get there. I wouldn't be thinking, okay, this is supposed to be 4 bedrooms. So my dad was like, I have never seen this happen before. He was like, this is crazy.
But the beautiful thing is that you owned up to it.
Yeah.
You stood behind, your being honest and taking care, integrity,
morals.
and you took care of them, and look where it got you
Yeah.
now.
Yeah.
I mean, they've come
They
back.
just bought 2 more with me
That's awesome.
after a past couple months. So
That's
they've
awesome.
stayed with me. So
Yeah. Well, it's something. Look, I know you're like I shouldn't say this, but that's actually not only is that a something you can learn from, but that's actually you can laugh about it now.
right.
You know what I mean? Like
yeah.
because it was.
But when that happened, I was like,
Oh, I'm sure.
Oh, anxiety floor just dropped.
and you feel bad. Your people are trusting you, so
Well,
to
the
make a
best
mistake
thing,
like that.
I agree with Ryan. The best thing that happened right there, and your daddy even said it like, "Hey, we got to own it,"
Right.
and that needs to happen. I mean, that's just the best thing to do at the end of the day, anyway. Just
Right.
like I made a mistake. I'm sorry. Let me help you fix it, or let us settle it, whatever.
Right. Yeah.
And try to move on and do it in a professional way. And you
Right.
did, and then it ended up working out. And now he's got a great rental from it. And
Yeah.
you got a heck of a story to tell. That is not that bad.
No,
I understand what you're saying. Like
It hurt,
in the
I'm sure.
moment.
He bought
I'm
a different
sure.
house than he thought he was buying. Like
Yeah.
that's
that part's a little kind of crazy.
we're still not completely sure what happened. If they
Yeah.
just built the wrong house on the lot, or if
Yeah.
it was just a mix up in MLS, or exactly
Well,
what.
we
but-
appreciate you sharing that story with us.
Yes, thank you for sharing.
And our listeners.
I was
so.
hoping I didn't want to put you on the spot on something.
She's going to defriend you on
just
Facebook.
crazy.
Oh.
But that wasn't that bad.
I guess in the fun fact,
Yeah.
I got my degree in classical voice.
Okay.
Oh,
Nothing
that's
like I sang opera
Wow. I didn't
in
know
college.
that.
opera.
You didn't know that?
I knew you sang like with your church.
Yeah.
Or with,
Hang on,
band.
like-
I didn't know you were
Like
opera.
opera?
Yeah, I was a classical voice major.
All right, give us something to go.
Cool.
No.
Yeah, hit it one time.
I don't even think I could sing like that right now if I tried.
Okay, well, I tried.
And it's been a
that
long
is
time.
awesome.
Ryan
It's a
got you on
long
the
time.
phone.
So
I
where
figured
can
out-
everybody go and see that? See you doing that? I'm just kidding. I'm just kidding.
That is a good
Now I
fun
sing in
fact.
church.
Yeah.
Let's just say.
Yeah, just as good. There
Me
you go.
too.
Well, all right, tell everybody
Or
where
karaoke.
they can. Oh, We definitely need video of that. You gotta give
There
us.
probably is some videos out there, huh?
We don't want to see those.
No.
They might go on the end of this podcast.
No, you're not.
Okay,
No,
we're not
no.
going to. She said no. We didn't get permission.
Yeah, like Tripp said, where can everybody find you?
Yeah, tell everybody where they
kind
can
of plug
locate
yourself and
Monique if they want to follow
Yeah,
you
I mean,
or contact you.
I'm on Facebook. You can find me there, Instagram, and it's I'm with Maselle and Associates is our company. So if you Google me, you might find some other podcasts that I'm on.
Yeah, that's true. Yeah, I think you're pretty good in the search engine if you just
For
Google mushroom.
investments. And
For sure.
But
things
yeah,
like
and real
that.
estate.
Real
I mean, you are a rock
yeah.
star in our industry.
Well, thanks,
so
Tripp.
absolutely.
locally, and we appreciate you spending time with us
Yeah.
today.
Absolutely.
This
Thank
was
It's an
fun.
honor to come on here.
Well,
I'm excited,
thank
especially
you.
it feels like full circle
Yeah,
talking about
Yeah.
what I
You
learned
can-
doing with you.
You might say that you learned your first investment deals with me and Tracy, but I learned real estate through you.
Yeah.
So,
Well, there you
That's
go.
so cool.
look at that.
All
That's
right,
what
let me-
happens. Get us out of
Let
here.
me take us out. All right. Thank y'all so much for watching this episode. I hope y'all learned so much about investing in single family rentals. I know I learned a lot more today. And thank y'all so much for watching. God bless.